It is time for us to hit social media for our hashtag segment. For that, we'd like to welcome in Megan Brantley, the VP of Research at LikeFolio.com, and we have fast market contributor Jenny Horn alongside us as well. Good morning to both of you. Jenny, we're talking some Target.
So in addition to, of course, the jobs number Friday, we have a slew of retail earnings this week. It's a big week for retail. Target being kind of the forefront because it's first. So that's Tuesday, it's tomorrow pre-market. And this is a name that we called one of the retail winners of 2019. It seemed like we couldn't stop talking about Target. But they did report disappointing holiday sales in January. So their comp sales climbed just 1.4% versus in the period last year, they were up 5.7%. So their comps are down. But rival Walmart also reported a sluggish holiday season, so it seems like the big box retailers didn't do as well as they anticipated. But it's important to know, I mean, Target stock, despite the fact that they have far less locations than Walmart, they've outpaced Walmart. So they're up 78% versus Walmart's 51%. So Target is doing something right, and I believe it has a lot to do with, of course, the same-day delivery. Customers are very happy with how quickly they can get their goods at Target, and it seems like that's all we talk about with LikeFolio, with you, Megan. It seems like it's always how fast can we get things delivered, and the conversation seems to be very positive in that way with Target. But you know, there is of course this coronavirus, which everyone seems to be talking about on Twitter still, despite the fact that the markets have kind of recovered. So that actually goes into my first tweet, which is from Jeff Mackey, who says, earnings, Target Tuesday, Costco Thursday. They should both postpone until the market has a better attitude. Retail supply chain is a problem, but there could be some huge comps in February, also extra day, which won't help shares, but still. So I don't know if you could necessarily say you could post earnings. I mean, I think that this is what the market needs right now. They need some positive earnings, and we need to continue this kind of breath that Alex and Kevin just mentioned. But I mean, are you seeing at all coronavirus weighing on these retail mentions? Because we did talk Friday with your fear index. So in the airlines, I'd be curious to know how coronavirus and the fear is weighing on retail as a sector.
Yeah, you know, whenever we look at Target specifically, we're tracking these mentions of people shopping at Target. Maybe they're buying a private label brand. Maybe they're, you know, actually going to a Target store. Maybe they're using the Shipt delivery service. And we can see an overall positive trajectory. You see that year-over-year pace for consumer demand of people shopping with Target is up about 8% year-over-year. Now, in comparison to other retail names like Walmart, like Amazon Prime, this is pretty comparable. I will note that to your coronavirus question specifically, the company that we're actually seeing the largest uptick in mentions related to consumers actually shopping there in preparation for this and that fear is actually Costco. So I think that Costco is pacing something like up 21% year over year, and it's largely driven of late by those people who are, you know, stocking up on these coronavirus supplies. So I will say not necessarily trickling into Target's consumer demand as of right now, but you can see that year-over-year pace is nice.
All right, Megan, I don't want to put any pressure on you on a Monday because I know, but this is a high pressure show. But how did Target mess up Christmas? Right?
I know.
In a situation where Toys R Us is out of business, you enlarge your toy department, they want to own Christmas. How did they not get that done? Or did they, and maybe the expectations were just too high? Tell me, I mean, I thought Target would annihilate Christmas, and the numbers came in a little light. How did this happen? I need answers, Megan, from LikeFolio.
I'm with you. You know, that was one that we were watching closely through Christmas. I think that they even had some type of a partnership with Disney and some of the items that they were offering. But I think that it was just a little weaker than expected. When we look at the current quarter pace, we can actually see that weakness in LikeFolio data. The purchase intent for the quarter that they're about to report was a little bit flat. However, it's promising that into this current quarter, so this current month that's already passed, the pace is much quicker. It's picked back up. So we think that one of the strength drivers of this is the delivery mentions, the same day service like Jenny mentioned. I think this was what propelled them all last year, is this growth in this sector. And you can see this chart as mentions of consumers who are, you know, getting that same day delivery, or maybe they're ordering something and picking it up at the store. And that's up about 25% year over year.
Yeah, so Shipt is really interesting. So I did some research because I wasn't sure what it was, because I am Amazon and Walmart loyal, as I always joke on the show. So you can basically, Shipt is like an Instacart. So it's like a third-party service, and it's $99 a year versus their same-day delivery. If you spend over $35, it's a flat rate of $9.99. So a pretty good deal. And I was actually asking around the newsroom because I was like, why would someone go to Target versus a Walmart versus an Amazon? What gives them the edge? And everyone said it's the speed at which you can get things, because the consumer is no longer happy with waiting 2 days or 3 days or 4 days. They need it today.
So where does Target sit in the quickness chain?
I think pretty well. And it also helps that they have these physical locations, so you could go
Right.
pick up something if you ordered it that same day. So I mean, I thought that was really interesting because I guess I don't never need something that fast, but it seemed to be the general consensus that Target is winning in terms of speed. And they do have 1,800 physical retail locations. But my next tweet says, flow is interrupted or diverted to rebuild supply chains. Go to Target or Walmart and check out, if you haven't already done so, how much of their inventory is made in China. We may get a double whammy here, or lower earnings and fewer buybacks due to the unforeseen outbreak. So Kevin, I'm really curious because from a trading perspective, of course, this is possible. I mean, longer term, Target could be in trouble here. How do you place a trade based on these unknowns?
You know, a trader's inventory is cash, right? You have to have cash on against your trades. That's the business I know. But Target's inventory is goods, right? They
Right.
can't make money if you go to buy a blender and there's no blenders there.
Right. Everything that's made in China.
Yeah, you have to have those goods on. You have to have inventory, you know, in the moving business, and you have to keep, you know, so supply chains are a problem, especially for these big retailers that go through big amounts, right? Because, yeah, I'm not saying there's not a risk there. I think there is, frankly.
And Megan, I want to get your thoughts on some of the sell-up that we've seen in Target, but kind of the thoughts, like going with Jenny's point just before that about how quickly Target's may be able to get some of their goods to the consumers. Obviously, urban kind of centers are going to be where more of these deliveries are taking place, as less people have cars, less people are going to, you know, actually be able to physically drive to these locations. Target seems to have a little bit more of a physical presence in urban centers than something like a Walmart does. I don't know if that's factored into it at all, but I want to tie this in with, we've also seen a ton of value discounted out of the stock price in Target. Has that outpaced your consumer purchase intent mentions leveling off or even turning downward, or are you seeing it kind of neck and neck?
You know, I think that one way that we can gauge how Target is performing is to take a look at their sentiment. And you can see that they're actually starting to recover a little bit. That sentiment is improving in this current quarter. It's about 70% positive. In comparison, I think Walmart is near about 55%. So I think that it bodes well for Target that consumers love shopping there, that they enjoy the experience that they receive whenever they interact with the brand. I think that, long term, this is actually a nice opportunities for investors with the recent sell-off. Our data is shaping up in a positive manner, especially for consumer demand and sentiment. So, you like to see that going into earnings. However, our data doesn't have any insight into the supply chain like you guys talked about. So I think that, a longer term view is probably good for this name.
Yeah, and I love that you mentioned happiness, Megan, because I can personally relate. It seems like Target is one of those names people walk in and they joke they buy like 6 things they didn't need because it's so hard not to. Target it's like the utopia for everything.
Yes.
I'm guilty of it.
I'm with you, don't worry.
And so, Megan, we're running out of time here. I kind of want to get your kind of closing thoughts on this if you had to sum it up. Obviously, we know the market's full of volatility right now, so I'm not going to say, up or down related to this earnings announcement, as we know earnings might not be purely in focus, but say you get a little bit of a move downwards or a move higher. Are you guys more likely to be buyers for the long term, or are you sellers of the Target for the long term?
I think that our data right now, especially purchase intent and sentiment with the rate of growth that we're seeing, we like that more as a buyer for the long term. So we're definitely, we're still bullish Target on a long-term outlook.
All righty, Megan, we'll leave it there. Thanks to Megan, thanks to Jenny.